Hey guys, welcome back. Patrick here. The Nasdaq is down another 300 points today. It is very bloody in the stock market, but you know what? I'm going to keep it really simple. You need this. This is the best thing that could possibly have happened to you. Do you guys know the expression short-term pain, long-term gain? Well, this is exactly the period we're in right now. We talked about this a little bit in one of the previous videos. I got amazing comments, so thank you guys for that. But now, let's talk about why this is a fake crash versus what a real crash is, and the truth about the inflation that they keep talking about. I'm going to go so far as to say you're going to love this video. If you don't, I'm going to refund you the price of the video. So let's get started. Alright guys, let me start by saying that you can't just stick your head in the sand and pretend like nothing is wrong. Of course, there are some red flags in the market. We always have to be aware of that, and you don't want to necessarily buy at the peak. I think that I made that pretty clear in my previous videos, but at the same time, I don't think that people realize that this fear-mongering right now in the market is really exaggerated. So let me give you a concrete example. I mean, this is not me making it up. I'm gonna put it on the screen. Ever since 2013, they have called for a crash every single year. So you got 2013, 14, 16, every single year they're talking about the market crashing by 50%, and it's going to be worse than the 2008 recession. And you know what's happened since then? Absolutely nothing. We have been in one of the biggest bull runs ever. It has been an amazing decade. So I hope that that clears that out, right? Doesn't mean that there's not going to be a correction in the next few months. This is very, very possible. But if you look at the chart, right, for the SPY for the past 10 years, there's been many corrections in the past. So while it's possible that we're going to see a correction in the next few months, right, and we've already started to see that rotation starting in January, where a lot of our stocks, mostly the SPACs and the growth stocks, have been getting really hammered. Meanwhile, you have all of the recovery plays that are now at all-time highs, and we really don't know if they'll be able to push higher from here. Right? So yeah, there is going to be some uncertainty in the market. However, the reason why I'm calling this a fake crash, I'm calling this just noise in the market, it is because there's no fundamental problem right now in the economy. The economy, in my opinion, is booming, and that is getting reflected in the earnings that we keep seeing. All right, so compare this with 2020 when you had the pandemic and then they shut down the economy. We really couldn't know how long this was going to last. The economy could have been shut down for 2-3 years, and we could have entered a bear market where a lot of these companies would have gone bankrupt. Well, it didn't happen. The government came to their rescue. Compare that also with 2008 when the housing crisis really reached its peak and the market crashed. Well, at the time you had companies like Bear Stearns that went bankrupt. Do you guys remember all the zombie foreclosures and the unemployment spiking up and all of that? Well, that crisis lasted for years. And then you had the dot-com bubble, where a lot of people right now like to compare the P/E ratios that we have with back then. Well, remember, back then, companies like Pets.com IPO'd at a massive, massive valuation, and then a few months later, they weren't around anymore. Right? So it is very different from companies like Apple that are reporting amazing earnings that are showing absolutely no signs of weakness right now. So that is why I'm calling those real crises, when there's a fundamental problem in the economy that can last for several years. Now, this noise, right, like when they're talking about the rates, it is usually temporary. It doesn't have a basis in the actual companies that we're investing in. Always remember that it's not just numbers on a spreadsheet. These are all companies that have real products, real revenues, and real profits. So over time, they are going to keep going up, and that's why I'm not really scared about this one. Even though right now they might lose 10-20%. That is great for us. It's not a problem. It is only a problem if you've been unlucky enough to have started investing in January and now you buy at the peak and now your portfolio is really hurting. But for everyone else, this is an amazing opportunity because the current uncertainty reminds us a lot more of 2018 when the government raised the rates 4 times. Then it reminds us in 2020 or 2008 or the dot-com bubble when there was a real crisis and we didn't know how long it would last. 2018 was basically an artificial crisis. The government raised the rates and it crashed the market. Look at what happened, right? So back here in September, they raised the rates and then the market actually crashed. The SPY lost about 50 points. So yeah, if you bought at the peak right here, you would have had some short-term pain. It would have really sucked. But if you zoom out, look at the chart. Would you have been happy buying anywhere here? Like, would you have been happy buying right before March last year? You would be way ahead. You would have built long-term wealth. So that's why these are just short-term blips. It's really just noise in the market. And that's why I want to tell you guys that, you know, if you're going to sell now, you can, but have a strategy behind it. In the grand scheme of things, these pullbacks are not a problem. In fact, they're really good. And the reason for that is that a lot of people actually missed the big gains that we've had in the past year. And this is what's creating so much wealth inequality in this country, is the fact that the people that own assets have gained tremendously, but everyone that don't actually didn't benefit at all from this huge spike and this huge asset inflation that we've seen. So let's talk about inflation. They are really using this as a scare tactic and they really want to freak people out. You guys know my theory. I think that they're using this to short the market, and then once they reach the bottom, they're going to go long on all these high quality assets. Now, the reason why I think that this is BS, honestly, right, is that most of my viewers, I would assume, I mean, I see the analytics, right, in YouTube. Most of my viewers are between like 25 and 54 years old. So hopefully you're not a kid working at McDonald's that has zero assets to your name, right? So you probably own assets, you have stocks, real estate, whatever you want to invest in, and you are going to actually benefit from this inflation massively, right? So we are really gaining on other people because we own assets. I'll give you guys quick examples. You guys know that I collect collectibles, right? I bought 3 of these Magic the Gathering boxes for 250 bucks from someone 2 months ago, right? Since then, I sold one for 150, I sold one for 250, and since I don't need the money, I can hold this one for the next 10 years. Maybe it's going to be worth 300, 400. I own it for free, right? So it is just a pure gain for me because of massive asset inflation. This box, it's pretty heavy, bought it for 1,000, now they're selling it for over 1,600. Massive inflation. Same for real estate. Do you guys own rentals? If you do, you're probably making bank right now. I have some assets that I bought for about 60,000, or I'm into it for like 55, 60, and right now it's worth 100,000. I want to refinance it and cash out and probably invest in other things. So I'm gonna put my money where my mouth is, right? If you're super scared of this inflation and now the market's gonna crash and all of that, I want to go long on more assets. So if you want to sell, shoot me an email, whether it's real estate, collectibles, no matter what kind of assets. If you want to actually sell them at a good price, just drop me a line and I'm going to buy it from you, right? So I think that people need to go long as soon as possible. Now, don't get me wrong, right? Not at the peak. Like, I wouldn't go with the stock that's right now at the all-time high. I'm talking about stocks that are getting beat up, right? So whether it's the SPACs that are going under $10, right? When they were dropping from 35 to 20, I said multiple times, now is not a great time to buy. Wait until it bottoms out. But now we are at a point where the risk versus reward is 10 times more attractive than it was before. Same for if you want to invest in those FANGs, right? Facebook right now is a little bit higher, but let's say it drops under 300, or other companies like those, right? As they drop, even if the PE ratio is high historically, I don't think it's a huge problem because of that massive inflation that we're seeing over the next few years. So use that to your advantage. Own more stuff because you're going to benefit from it. So let me know in the comments what you think. I mean, I'm going to put my email in the comments. I'm not joking. If you guys have real estate that you want to sell or collectibles, stuff like that, I'm going to buy them from you. So just drop me a line. I'll see you guys in the next video. I hope you enjoyed it.